Hello, beautiful students. How are you? Yes, I just want to explain question number one for you. Um, I'll try to, um, to be as clear as possible in my explanations. Okay. But before I go in further, I just want to say you guys are wonderful rock stars. You are doing your studies according to the way we agreed. Okay, so our question is this one. The question one, let me locate it somewhere. Okay, I think it is don't mind my, where is my photo gallery? Where are the photos? Okay, the camera is this one, but I'm not seeing the photo. What's going on? Right. Okay, what happened? What happened? What happened? Mm-hmm. Right. Okay. I'll try to locate it. Okay. Um, this is the question, ladies and gentlemen. Okay. I'm sure you're seeing it clearly. All right. Now, um, PIE PLC manufactures two products, A and B. Uh, the cost cards are as follows. So, cost cards only give us information about the production of a product, about the costs involved in the production of a product. Okay, so we've got two products here, A and B. The selling price for A is 25, for B is 28. Materials, 8, um, $80 per unit, and for B, $20 per unit. Labor, $5 per unit for A, and $2 per unit of B. And then the labor, the other variable costs, that's 7 for A and $2 for B, and um, fixed costs 3 for A and 2 for B. Okay, and the total costs are $23 for A and $26 for B. In the exam, you should be having this ability to determine the meaning of each figure. Okay, because somebody cannot actually see that $23 or and $26 are the costs of producing this product. Then the profit is found by deducting costs from sales. And our sales, the selling price was $25 for A, and the total costs were $23. So 25 minus 23 gives us a 2. So the $2 is the profit. Okay, so profit for A is $2 per unit, and for B, that's $2 per unit as well. All right, then machine hours per unit, that's 2 hours for product A and 1 hour for product B. So which means the process of producing A requires 2 hours of machine hours per product of A, whereas for B, that's 1 hour. And then the maximum demand for these products is 20,000 units for A and 10,000 units for B. The total hours available are 48,000, which means that uh, machine hours uh, are going to be considered as limiting factors, okay? Because the only available hours are 48,000, okay? Now, you are required to calculate the optimum production plan and the maximum profit on the assumption that in the short term, only material costs are variable using a throughput accounting approach. So the examiner is telling you that of all the things there, the only variable cost available is materials. So if materials are the only costs which are variable, therefore in the back of your mind, you need to realize that you are now being drawn to the concept of throughput accounting, because it is only in throughput accounting where materials are considered variable and the rest of the costs are considered fixed costs. All right, so which means in your computation for fixed cost or for factory costs, then you need to only realize that uh, everything outside materials is fixed. For example, labor, other variable costs, and the ordinary fixed costs are all considered to be fixed costs, which are going to be used in our computation for factory costs, total factory costs. Remember, there's that formula where you'll be required to put that into consideration. Lastly, on part B, you are required to calculate the throughput accounting ratios. Okay, so that was the question, ladies and gentlemen. For those who have got poor eyesight, these are the figures. All right, so let me just try to zoom out a bit. Okay, now let me look for some board which we're gonna use. All right, we need some board, so let me try to locate a board here. Okay, since we now have the information we want to use, then we just have to have a table which is not going to be that special. Okay, so we'll be having our selling price. Let me look for a pen. Where can I get a pen? I think we need this one. Okay, so we've got our selling price. The selling price for A and B. All right, so the selling price was 25. Sorry, 25, and for B is 28. All right, and the material cost, let me just say M because my pen is not friendly. For M, that's 8. Okay, the material cost, and then for B was 20. Okay, um, so if we remember, these are costs, they are in brackets. Okay, so selling price minus material costs, we get what is called the throughput. So the throughput is going to be 17 for A, whereas for B it's 8. Okay, now we are also told that the machine hours per unit to produce this units, they require 2 hours per unit for A. All right, 2 hours, 2 machine hours per unit for A. So machine hours per unit. Remember, per unit, we require 2 hours, okay, to produce A, whereas 1 hour, 1 machine hour to produce B. So we need to divide the throughput by the machine hour. So we say we put this, we underline as a division. So 17 divided by 2, we get uh, what we call the throughput contribution per hour. So what we are going to get here is what is called the throughput contribution, and which is 850 for A, and for B is 8. Okay, now when you do this, you then have to rank. All right, because for you to produce what is called an optimal production plan, right? Let's look at um, the proper wording. Let me refer to the question. All right, it's optimum. Uh, okay, not optimal, but optimum production plan. So the optimum production plan, or PP, the optimum production plan. I'm sure you guys are following. Or PP, or optimum production plan, should be um, uh, informed by ranking. Okay, so before we go to the plan, let's talk of the ranking. Okay, the ranking, I said RK, the ranking. So using the throughput contribution per hour, you can see that if we produce product A, we're going to be having a throughput advantage of 50 cents above B. So therefore, it is most advisable to produce more of A than B. So our our first preference in production should be product A. We give a number one priority, and then B a number two. So B is going to be produced after A. So if we still have extra machine hours after producing uh, the A, okay, after meeting the demand for A, we then have to consider the demand for B. Why? Because A gives us more. A gives us more money. All right. So that's the idea. So let me look for another board here. Okay. So I'm going to wrap this information and then um, try to proceed. All right. So you can actually screenshot uh, this information for you to refer as we proceed with the working. All right. So now we've done the ranking, okay, and we've discovered that product A requires priority over B. Okay, so let us now do the production plan. Production plan. Okay, this is a P. Sorry. Okay, it's a P, that one. Okay. Now we want information for the units. Okay, information for the units and information for the hours. All right. So we are going to start with A. And we are told in the question that the demand for A was 20,000. Okay, 20,000, 20K, all right? And we require how many hours, how many machine hours per unit? We require 2 hours. So we multiply by 2 and we get 40,000 hours. Remember, these are in thousands. Let me put a K here for hours. Okay, 40,000 hours. And for B, we will need how many hours for B, or how many units shall we produce? We only have to be informed by the amount of hours remaining. We are told that um, the available hours were how much? They were 48,000 in the question. We are told that the available hours were 48,000. So 48 minus 40, because 40,000 hours have already been taken by A. So the remaining hours for product B should be 8,000. So if we have 8,000 and we know that the amount of hours required to produce product B is 1 hour per unit, so that's we're going to put 1 here. Okay, because here we are doing what is called backward um, engineering. Okay, um, or let me just say reverse engineering. Okay, we are going backwards. All right, for us to determine the amount of units we need to produce for product B, we have to do that using backward integration. So we are going to say, okay, so we know that we are having 8,000 hours available, but we need 1 hour to produce 1 unit. So how many units are we going to produce if we are having 8,000 hours, but we require 1 hour to produce 1 unit? So it means that we need to produce only 8,000. Okay, 5,000 units of B. So this was the production plan expected of you. Are we together, ladies and gentlemen? Okay, now let's move on to the aspect of determining the profit, because the question also wanted us to determine the profit. Okay, because if we do not come up with the profit, then we're not going to earn all the available marks. So let me erase this. Now, for the profit, profit I'm just using my hand, so the writing is not that pleasing. All right, so we know that the selling price uh, was $25 for A and for B was 28, right? And the material costs were 8 and 20. We know that, you know, when we were calculating the throughput, okay, when we calculated the throughput, we were just deducting material cost from the selling price. Okay, so when we are now calculating the profit, we are not going to start again to use the selling price less the material cost and so forth. No, we are only going to start at the throughput level. Okay, because we know that the throughput had already taken care of the materials figure. All right, so let's start at throughput level. All right, so we are going to say for product A, for A, we know that the demand is 20,000. We have calculated that 20,000, all right, 20,000 units multiplied by the throughput. The throughput was 17. Remember, go back to the video. The throughput was 17. This is 17, okay? That's 17. It's not an H. Let me just try to rewrite it. Okay, 17. $17 per unit. That was the the throughput. Okay, yes, what's going on? Okay, that's the throughput. Now, 20,000 multiplied by 17, we get 340, 340. Okay, this is in thousands and thousands. I put a K there, but in the exam, don't put a K. Okay, here I'm just using a phone, so I want you guys to, you know, to be very alert, right? Don't put those K's in the examination. You are required to uh, put the zeros, 3 zeros on top there, and a dollar sign. Remember, this is money, so you don't forget to put your dollar sign. Then for B, for B, we know that we are going to produce 8,000 units of B, and the throughput for B was 8. So this gives us 64,000. So the total throughput of these two products is 340 plus 64, that's $404,000. But then we are not yet finished because there are factory costs to consider. So less factory costs, and the factory costs are the fixed costs. Okay, and fixed costs, we say that everything outside material, everything other than material is a fixed cost. So labor, other variable costs, and the ordinary fixed costs themselves are all going to be amassed, so as fixed cost or factory costs. So this is what we're gonna do. Okay, this is what we're gonna do. We are going to say for A, we are going to add everything per unit. All right, so we were having the labor costs. The labor costs were $5 per unit, and other variable costs $7 per unit, and $3 fixed cost per unit for A. So if we add those ones, 5 plus 7 plus 3, we get 15. So we are going to say $15, okay? We're going to say $15 multiplied by 20. So for A, we're going to say 20 multiplied by 15. Remember, it's 20,000 multiplied by 15. And this um, should give us something like, all right, just to avoid cluttering there, uh, we can just sum up the figures that, because we know that that should be 300,000 if I'm not mistaken. Yeah, 300,000. And for B, let's do B so that we total this once and for all. So that's 10,000 um, units. Uh, why am I using 10,000 units? Somebody might be confused and say, why are you using 10,000 units for B? Because we are only going to manufacture 8,000. Now, for the computation of fixed costs, the principle is still the same. Okay, fixed costs are assumed not to change with the level of activity. So we will consider the total fixed costs, the total units expected in the production in computing our fixed costs. Why? Because the assumption was that the costs were going to be met regardless of the fact that the demand will change or the optimal production plan will change. Am I talking to somebody? Okay, so this is why we are going to use the expected value of fixed costs according to the plan or according to our budget. Okay, so that's the thing, ladies and gentlemen. So our budget was, I mean, according to the demand. The demand was that we were going to have um, sales or the demand of 10,000 for this. So for products B, for B products. So we're going to use the 10,000 and not the 8,000, which has been determined after considering throughput contributions per hour. So we're going to say 10 multiplied by the total fixed cost per unit, and the total fixed cost comes from the labor, the other variable costs, and the ordinary fixed costs themselves. Remember, we are in a throughput environment. The throughput environment, okay, is different from the traditional key factor analysis, right, or limiting factor analysis. This is a different perspective. Please bear with me, right? So let's add these. I think there were two, okay, three twos there. They give us $6 in total. So 10 multiplied by 6. So if you add, we say that 20 multiplied by 15, 20,000 multiplied by 15, that's 300,000, and 10,000 multiplied by 6, that gives us 60,000. So 300,000 plus 60,000, this gives us a total of 360. That's the total. And these are costs. Okay? These are costs, fixed costs. Are we together? These are costs. So we need to deduct them from the total throughput. This is the total throughput. Okay, total throughput. All right, and we are going to get a profit of, this is the profit. The profit is 404 minus 360, and this should give us 44,000. So the profit we are going to get here is 44,000. Am I talking to somebody? Okay, that's 44,000. And we are done. That's the solution for part A so far. That's the solution for part A so far, our maximum profit. Okay, now we need to determine a solution for part B. Okay, so I'm erasing this information. Now, um, we are required to calculate the throughput accounting ratio, the throughput accounting ratios in part B. Okay, but for us to do that, we need to know what was the cost, the cost per factory hour. What was the cost per factory hour? Okay, or let me just say, what was the fixed cost per factory hour? Because that's the very important information we will use to compute a throughput accounting ratio. So the cost per factory hour is given by cost per factory hour. The cost per factory hour is given by, we need to know the total fixed costs. The total fixed costs all divided by the hours on the bottleneck resource. The total hours on the bottleneck resource, or total hours available to the bottleneck resource, something like that. Okay, so total hours, total fixed cost over total hours. Okay, so we have determined the total fixed cost in our computation um, for on part A, when we were calculating the fixed cost, the total fixed cost for both product A and B, and we determined that they were 360,000. Please revisit that part of the video. 360,000. Okay, divided by the available hours according to the question. We were told that only 48,000 hours were available. So 48,000 hours. Remember, these are hours. So you can see that if you punch these figures in your calculator, you are going to get a $7.50. $7.50. This is a dollar sign, ladies and gentlemen. Sorry. Uh, I'm sure you're seeing it, that it is a dollar sign. A well decorated one. Okay, that's a dollar sign. So the cost per fixed, the cost per factory hour is $7.50. You need that figure. I bet you need that figure. Okay, so sorry, let me just screenshot. All right, now that we have the um, the cost per factory hour, which is $7.50, let us now compute the throughput accounting ratio. And this is where you are going to see that, oh, that was a very important figure. All right, so I'm erasing this part. Okay, now let's calculating the throughput accounting ratio. How do we calculate the throughput accounting ratio? How do we do that? Throughput accounting ratio is given by the throughput of the product in question, okay, divided by the cost per factory hour, which we have just calculated. So simple, isn't it? Very simple. Very, very simple. Okay, so for A, what was the cheaper for A? For A, the throughput was, remember, this is throughput, not the throughput amount itself, uh, but the throughput per factory hour. Sorry, per hour. This one is throughput per hour. throughput of a product per hour, not the monetary throughput, but the throughput per limiting factor hour. So the throughput per hour, okay, or throughput contribution per hour. Throughput contribution per hour. Let me put a C so that you guys won't forget. Okay, throughput contribution per hour. Where is the eraser? Trying to locate the eraser. Is this the eraser? Yes. Oh, it's not again. It's not an eraser. Where is the eraser? Oh my gosh. Okay, let me put it this way. Throughput uh, contribution per hour. That's a P, and I've got problems writing P's. I don't know why. Okay, throughput contribution per hour. Okay, all divided by the cost per factory hour. So for A, the throughput contribution per hour was $8.50. Okay, 8.50 divided by the cost per factory hour, which we have just determined to be $7.50. So the ratio would become 1.13. Sorry, that's it. The last figure there is a 3. You 1.13. This writing of mine. Okay, 1.13. This is a point. There is a dot. Okay, 1.13. And for B, we are going to we determine that the throughput contribution per hour was $8, 8.00, all divided by 750. The cost per factory hour is just the same, okay, 750, and you are going to say the ratio was 1.07. 1.07. Okay, 1.07. That was all, ladies and gentlemen. Now, the question you might as well be interested in answering is, what do these throughput accounting ratios mean? What do they mean? Because that's the last bit of it, although you were not required to answer that part, but you need to know what those throughput accounting ratios mean to you. Oh, I'm sorry, the video just cut uh, accidentally. All right. I was actually saying that the examiner might test you to explain the meaning of the throughput accounting ratio. Now, by definition, the throughput accounting ratio is the ratio of the throughput per unit of a limiting factor or a bottleneck resource to the factory cost per unit of bottleneck resource. All right, so by default, we are saying that the throughput being a return should actually be higher than the factory cost. Okay, so this ratio should be as high as possible and certainly more than 1. So it should be 1. it should be more than 1.0. All right, so given the ratios which we have just calculated, we can actually see that uh, these ratios, that is the ratio for A, which we determine to be 1.13, and the ratio, the throughput accounting ratio for B, 1.07, we can actually agree or be convinced that it is actually worthwhile to produce both of the products, although A gives us much more money. But in terms of throughput accounting ratios, these products are profitable, okay, because their throughput accounting ratios were above 1.0. Okay, I think that's the information which we need to put across. All right, so ladies and gentlemen, I am the Acca tutor, Mr. James Timcliffe, and if you feel like you need further coaching, please don't hesitate to contact me on WhatsApp or direct call, that is on +263 774 596 368. Okay, so this was um, me to you and you to me. Until next time, ladies and gentlemen, continue to feel excited. I mean, very, very excited. Thank you.